Yeah, I want to echo something that Jenny said, and I understand that it might be off message, but if there's a stock that you would buy if you knew it was a 50 basis point hike, but you would not buy it if you knew it was going to be a 75 basis point hike, like somebody tell me what investment that might be, right? So, like stating the obvious, we've built this event up into a Super Bowl of sorts, but it really isn't. The most notable thing about Jackson Hole this year is that it's the highest inflation reading ever. So it's like the first time that inflation has been a national crisis since they started doing Jackson Hole in 1982. And, like, why did they even start doing this in the first place? Believe it or not, the only way they could get Paul Volcker to agree to sit down with anyone else is if there was fly fishing nearby. Like, that's how inconsequential this event has I'm not even making this up. So that's how inconsequential. Even if you look at recent years, the most notable two things that we've seen happen coming out of Jackson Hole, I would say Mario Draghi in 2014 reiterating the dangers of deflation and laying the groundwork for European-style QE. That was probably a moment. And then maybe in 2018, when Powell took, I think the speech was called something about guided by the stars, and he talked about almost like his intellectual framework for the natural rate of interest, the natural rate of unemployment, which of course are not quantified things. It's like a Rorschach test for economists. So I don't think that all of a sudden this is going to be the year where they're going to speak tactically. It's not. This is an event where they present white papers and talk about their intellectual framework.
Yeah, that's what I was alluding to.
About these big picture ideas. So let me wrap this up for you. Here's what matters: commodities over the last month. Bloomberg Commodity Index hit its lowest level since February in the first week of July. It's been rallying again. It's 13% off those lows. Commodities are coming back to the forefront. Why? The world is on fire. We have dried up rivers in Europe and in China that are literally not allowing the flow of goods being shipped that way. Like, these are the things that are really going to impact the market. 50 versus 25, you might get a one-day market move off of that. Beyond that, the next day, everyone will act like, oh, yeah, I knew it was going to be that. Yeah. So don't run around in circles and drive yourself crazy over this.
I mentioned less than 2 hours away from our own Steve Leisman with Jim Bullard. Leisman joins us now from Jackson Hole as he prepares for that, and he's already done a couple of interviews today. So, Steve, I'd like your first reaction to this idea. Josh says, maybe inconsequential, this meeting when it's overhyped. I've read that today, too. Timmeros yesterday saying that, it's unlikely that the Fed chair is going to really lay out this granular path of rate hikes for the next few meetings. It's a bigger picture view. What's your own view?
If I could just back up a little bit, they think that beta is 50 to 80% of stock changes, right? The stuff that you do in terms of analyzing the earnings, stocks are going to move with beta. What's the beta? The beta is the Fed, and beta is what's happening with the economy. We're going to do a whole bunch of interviews here. Some of my competitors will do other interviews as well. The Fed chairman will give a big speech. There's lots of room for beta here. So, I get what Josh is saying. I think he's right that 50-75 makes less of a difference than the overall outlook here. The market has come a long way towards meeting the Fed closer to where they were. So, I just say you don't pay attention at your own risk. If you think it's not an element, not an important element, you're free not to listen. We're going to talk to 5 or 6 folks. We're going to talk about the near-term outlook. We'll talk about the long-term outlook, and I think all of that matters for investors. And I don't think I don't buy the idea of too much information on that point. Walking directly into the trap that Josh Brown set for me, we did have a talk this morning about 50 versus 75 with both Esther George and with Patrick Harker from Philadelphia. So here's what Harker from Philadelphia. Here's what they said about these about 50 or 75.
So I want to see the next reading and then decide.
Inflation reading?
Yeah, next inflation reading. That said, I want to put this in a bit of a historical context. Since 1983, the Fed has raised rates 86 times. 75 of those were under 50 basis points. And I think we have to recognize that a 50 basis point move is still a substantial move.
Obviously, doing 75 in June and July sets a pace that I think the public is looking for. What changes that would cause you to step down? And I think certainly at some point getting to a steadier, more sustainable pace is going to be important.
So, Scott, I think there's three themes that I'm watching, and these are all more important than 50 or 75. One is there's going to be a fairly big shift from Powell from last year, who did sort of put his eggs in the transitory basket last year. He's taken them out and put them more into we got a lot of work to do basket. Is there a need for a recession to combat inflation, to get it down to where it needs to be? And whether high inflation, there's a permanent aspect to some of the high inflation numbers we're seeing. So those are three of the themes we're going to be getting some information on over the next couple of days.